Welcome to Your Money with Leo Daprile. I'm Leo Daprile, and each week on AM 570, Dan Rivers and I will talk about anything and everything to do with your money. If you ever have questions, please feel free to call me at 330-533-6936, or you can email me at leo@gemyoung.com. Enjoy the show.
This episode of Your Money with Leo Daprile is sponsored by Grange Insurance.
Good morning. This is Your Money, brought to you by Gem Young Wealth Advisors. You'll find them in Canfield. If you need somebody to manage your money or give you direction in life, you'll want to sit down with Gem Young Wealth Advisors and my good friend Leo Daprile, who's been with us for many, many years. In fact, the first time I ever talked to you about was we were talking about parents being able to find out where their kids were with the insurance companies. Remember that?
Oh, right, the apps.
Yeah, now that's pretty much a standard thing. But topic du jour here this morning, government getting bigger and what it means for the stock market. What happens in Washington, D.C. is going to shape Wall Street. True?
That's what I'm starting to believe.
Okay.
I didn't believe that before, and I wanted to talk about this today because conventional wisdom is Washington was only responsible for headline risk. Okay? They weren't really coming out with such substantial policy decisions that it was going to move the economy or markets.
Mm-hmm.
Well, that's starting to change. I think what we're seeing with this more progressive agenda, and we're seeing these significant spending bills, that we almost have to start looking at the government differently. Here's a good case in point. When we went through the debt ceiling issue and we have the threat of the government shutdown, the only thing people really worry about is federal workers being laid off.
Mm-hmm.
They don't worry about necessarily a significant slowdown to the economy because that seems to be very concentrated. Then knowing once the shutdown's over, those people are paid back their money. So it's just a delay in the consumption.
Although something did change a little bit in this, in that the federal government says now we're worried about paying our bills. We could default on bills for the first time.
That's correct. And that's creating more volatility, which is what's becoming part of the broader government having more of an impact with our economy and with our markets. Think about it. You're going to have another $1 trillion in spending for infrastructure. So a lot of companies now are going to be relying on the government for their contracts instead of private companies. Okay? So that's going to be a much more significant player, and especially whatever the $3.5 trillion Build Back Better package ultimately looks like. Let's just say it comes in at $2.9 trillion. That's still another $2.9 trillion of significant government spending now having a true impact on what our economic policy.
So if you have that spending, that's taking money out of the consumption for Americans, right? They don't have that money to spend.
Well, now the government has more control. Okay, they have more control over the economy because they're one of the biggest spenders in the economy now.
And they never get the best price, do they?
They don't, because they're on policy, not price.
Yeah, and in fact, they come up here and I want these hammers, and here's a guy down here selling the same thing, but it's not that brand. No, the formulary says that you buy this kind of a hammer, and that's what they do.
That's right. And let's go back 6 months ago when we were talking about inflation, and the word transitory inflation started coming out.
Mm-hmm.
Well, I'm coining a new word that I'm calling public policy inflation, and I think this transitory inflation is going to prove to be long-lasting. I don't see it as transitory.
And is it as simple as the fact that oil is now $80 a barrel this morning?
Well, that's market manipulation. It's $80. That's the bottom line. That's what it is. But there's no supply shortage. There's just manufacturers choosing not to produce it.
Okay, so they're hanging back, and they can get the same for producing less.
They're price gouging like so many other people are.
Okay, and
that's the bottom line.
And so that equals on the street here on 224, $3.29 a gallon.
That's what I saw coming to the show this morning.
Yep.
Astounded me.
$3.29 a gallon, and a year ago it was at least $1 cheaper, wasn't it? Probably $1.30 cheaper.
Yeah, it was over $1 cheaper.
Yeah,
that did you know?
But the oil prices have a lot to do with this, even if it is manipulated, right? Because right now we're still an oil-based economy.
That's right. And I think what we're starting to see, and this is why I don't think this is transitory inflation, there's so much government money in the system, we have to have inflation.
Okay, when you say transitory, you mean that it's a hit and miss and that it will eventually fade? It's going to continue to go up? Because my wife went to the store yesterday and she says, oh my gosh, you should see the price changes if you can get the stuff.
It's crazy. Transitory was a term that really came out and was promoted by the Federal Reserve about approximately 6 months ago, by saying just because of all the stimulus money, we are going to have a temporary rise in inflation till this excess money gets out of the system.
Okay. You're hearing Leo Daprile. You can't see him because I didn't turn the camera, but in any case, you hear his dulcet tones here. And he runs a company called Gem Young Wealth Advisors. He's here every Tuesday here. And if you want to reach him, it's at Gem Young. Just search Gem Young in Canfield. He does help you with personal finance. So the low interest rates, what role do they have?
That's part of the reason you're seeing, and again, this isn't a political analysis. This is it is more of just a non-partisan political analysis. One of the benefactors of the low interest rates really surprises me, but seems to have been the people with the assets. They've been able to accumulate more assets. People that didn't have stocks or houses, that demographic over the last 10 or 15 years hasn't really changed.
Would we benefit from a little bit of an increase from the feds?
At the rate the government's spending the money, that actually, in my opinion, will put more inflationary pressure out there.
By the end, so the feds, what is the interest rate now? Is it the prime is what?
Between 0 and a quarter point.
And did we ever have a time we went negative?
We have not.
Okay.
We have not.
There's not much room to go, is there?
Right. And I think you're going to have, but their argument is that the debt payments to the gross domestic product, GDP, typically is around 2%. That's the average. Yeah. We're below that. So there's an argument that we can have increases in interest rates. But it seems to be where it's changing is people seem to be, even though the debt bothers them, people are more interested in the government spending the money for more social programs and more help of American people than they are worried about paying back the debt.
You note in your pre-interview here the cost of shipping a 40-foot container from Shanghai to New York City has gone from $2,500 a year to $20,000.
Astounding, isn't it?
So there's no question on why we are paying so much more for the product, right?
That's correct.
$2,500. Now, and this is not the contents. This is the shipping costs.
This is the cost of shipping.
Oh, my gosh.
Fuel costs up 65%.
Wow. Then that's just... And, you know, I wonder how much it's going to, maybe it will affect people when Amazon comes up and says, okay, free shipping is off the table right now. Will that happen?
I think the other thing we have to look at from a broader point of view as well is if you've been paying any attention to China, China has been telling Chinese companies, buy from Chinese companies. So they're publicly saying, we don't want to buy from anybody but our own. We are wanting to do our best to be as self-sufficient as we want to be, okay? Which is putting a lot of American companies at risk because they may lose the ability to sell their products to the Chinese people and all these plants and all these manufacturing facilities out in China.
And if we were to say the same, just buy from America, we've tried that, but we don't have the product, do we?
We do not.
So
neither country has the infrastructure to back that statement up.
Okay. So you've got, think about that, folks. Just roll that around here. A 40-foot container from Shanghai to New York used to cost $2,500 a year. And that was about, what would that period have been? Would that have been pre-Biden?
18 months.
18 months. Mm-hmm. And now $20,000. Cost of fuel rose 65% in the past year. That becomes the issue, too. Why are fuel prices so high? I mean, natural gas to electricity. Ron was talking about natural gas yesterday. That is going to take a hit.
You remember, Dan, as early as a year ago, we were talking about how much excess petroleum there is in the ground. Mm-hmm. Call it what you want, gas, oil, whatever it is. They're just choosing not to produce it.
Okay.
In our country, we call that price fixing.
Exactly. And then, of course, we had this period here where we were not fracking because natural gas had become so cheap that they couldn't really get it out of the ground. The only people that could really get it out of the ground is a place like Saudi Arabia, where they have almost a pure crude oil that it's easy to get to. Here we have to frack for this. It costs a lot of money to do so. Mm-hmm. So I always argued that you need a good midpoint for the oil prices. I mean, 80 is not the number and 20 is not the number. Maybe $50 is about right.
That's right.
But then you still have to have people that are willing forego their self-interest and get this out and have a steady flow of this electricity. Do you think electric is going to affect this, that we will eventually go away from natural gas and from the types of fuel that we've always had, including coal and oil?
I think coal's days are numbered. I think just because of the cost and the regulation that goes along with it. But with the onslaught of everything being electric, I don't think the wind is a solution, and I don't think the sun's a solution.
Yep.
So I still think we need to have gas to produce electricity.
All right. And again, we're going to go take this back to the beginning. What effect does all of what you have just said have on our 401ks?
Hopefully your portfolio managers are now paying much more attention to what happens in Washington. That's the key, because the rules of the game, in my opinion, are beginning to change in not so subtle way. If you really, like, I'm trying to look at it and open the book to it, and I see this as big and significant and coming quickly. Mm-hmm. So I think, and even talking with our money managers, that you have to plug that in, because there's going to be companies that win and companies that lose because of the changing government policies. The way they compete is going to change. The gridlock in Washington is going to create much more political and more market volatility, because now their decisions about the money they're going to spend or not spend will have a much more significant impact than it does what people are used to.
So essentially, you should actually visit your financial advisors and say, hey, you know what, government spending may affect my 401k, the stocks that I have. What are you doing about it? That's what question you should be asking.
That's right.
All right, very good.
In our firm, we're on it.
All right, very good. And let's talk about your firm a little bit here. Gem Young Wealth Advisors has two sons that work in it, Leo Jr. and also Stephen. Stephen is right beside him every day and learning the craft with his dad. Stephen just got married, by the way, didn't he?
He did.
A young lady from Lima.
Yes,
and,
he did.
Sarah's a very nice young lady. And you'll meet them when you go to see Leo. And then Stephen takes your insurance side.
Yeah, Leo does.
I mean, Leo, yes.
Leo handles the insurance side, because really it's insurance and wealth advisors, but they integrate so much. And as you've been hearing from Leo the last couple of weeks since when I've been out, of how we approach insurance.
And then his older son, Sam Morocco, is somewhere in it.
Yeah.
Sam knows more about Social Security. Let me just put a mention in for that, folks. If you're really wondering about Social Security, Sam is a very patient guy. Sit down and talk with him, and he'll give you direction, even if you don't do business with him.
That's okay.
Yep.
Just trying to do the right thing.
Very good. Well, what else do you want people to know about your company?
Well, we work with a select group of individuals and successful business owners that aspire for the work optional lifestyle. We've developed processes that we've refined over time to help people get there. It's a very fun, very interactive process. It's a very real process. As you know, we talk about it. We use words like we have to have what we call candid, vulnerable conversations. Mm-hmm. If we're really going to help you, we really got to get to the heart of things and really get to know people, and that means us both being that way.
Sits down with, like in my case, Dan and Cheryl. What do you folks want to do when you get older? And we have that conversation, right? Yeah.
Well, and many times people have ideas in their head, but they're not concrete.
Yeah.
That's just human nature. So we really make it to where it's concrete, workable, in a plan we can execute.
And then you have a company that backs you up, Clark Capital, and they are all over this, and they're very good. They work with a select group of customers, too. You're not the biggest in the world, are you?
No, that's right. We don't try to be. Our motto's always been, we don't want to be all things to all people. We just want to be all things to some people.
All right, you're going to work. Give us your phone numbers. We'll give you 10 minutes to get there.
You can call me at 330-533-6936. Or you can email me at leo@gemyoung.com.
Gemyoung.com. All right, just down the street. And if you're in the Tippecanoe area, they're right in that complex there. You'll find them. Gem Young Wealth Advisors. They will help you. And they also have concierge services, but they also have do-it-yourself services. Ask about those, too.
Mm-hmm.
All right. Very good. Good to have you. Go Penguins. And we have a couple weeks off here that we can just relax, but we had a nice win on Saturday.
Yes, we sure did. Sorry I missed it, but I'll be there for the next one.
All right, man. Thank you for coming by.
You got it. Good to see you.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to AfterHoursYoungstown.com.